Hi, very good morning. Today I will be trying to decode the global macro environment with also reference to the Indian context. Okay, so I've made couple of pointers for the extempo which I'm trying to do. So firstly, let's understand the US market. Then I'll give you a broad overview of things in US and other countries, and then I'll come to India. Starting with US, the mother market. So it drives the global economy. And overall, the situation in US economy is not very great. I'll share a few pointers. Firstly, there has been a gradual move towards de-dollarization. Now, what do I mean by de-dollarization? Is that people are gradually moving away in some limited form or diversifying gradually. If you have some part of your money, you're again not putting that additional $2 and moving to alternates. Why this is happening is the huge national debt which US has, close to 39 trillion or so. And the debt is increasing because of the huge borrowing programs, various programs that they're doing, and the war which is being again uh, a costly affair. I think that also will be eventually funded. So there is a huge borrowing which will do government is doing. So that increases a lot of overall strain, and the debt pile keeps increasing. So when huge debt is there, obviously the move is towards de-dollarization because more money, more circulation of dollars, obviously. So that prompts people to move to alternatives. And central banks are buying gold as the next best alternative. Now, during this war, dollar has gone up the index from 95 to 100, but even at that level, it's not a great level. I'm not going to predict because impossible to do that. Number two about US is that there are a lot many things which I've explained in my earlier videos, but for namesake, I'll repeat again. Number one is that there is a housing issue which is happening because mortgage rates have risen because of high inflation due to various factors and overall their monetary and fiscal policy. And because of that high inflation, prices are going up and it's causing a lot of problem in the housing markets, which is just started. So the cost of homes is high, which is trying to do, but there are buyers which cannot afford and sellers who don't want to sell because they had bought the money or the building at property at that cheap mortgage rates because current mortgage rate is about 6.5, 7%. Sorry, 6.5 roughly. Number two is because of the inflation, there is a weak labor market because they keep revising their data. And there's a lot of moonlighting if you really see deep down. Moonlighting means people taking 2 to 3 jobs. Then, because of the high inflation, there is overall situation prices going up. So people have money basically to buy roti kapda makan in the layman's American term also. So those prices will not come down because whatever money you will get, you will buy those things. Then there is another thing which you have read is that AI thing. The AI thing is also overhyped to a certain extent. So that also is creating an impact, and also people say it is creating job losses. Then there is a credit squeeze because a lot of these companies which were giving credit to AI and other related small sectors, non-AI also, because of these certain implications, they're not able to return the money on time or there is some difficulty. So it's causing credit squeeze, and investors are also trying to take back money from these firms where they're invested. So these are some things. And then, of course, I've just highlighted the overall situation of the huge inflation, which is partially because of the policies and further aggravated because of the war. So this is going to also cause already the 10-year in US has gone up to around 4.3, 4.4. So which is on the higher trend. 30 is almost close to 5. Uh, so this is a sign of higher inflation. And if the crude problem, the Strait of Hormuz, the Iran war doesn't get resolved quickly, inflation has already started showing, not only in US but in other countries also, if you keep reading all these things. Now, because of this, initially gold and silver went up, but it came down because of the fear that Fed may again have to hike rate. And because hiking rate is bad for gold in their trading modules, so they automatically thought to sell. But it is not the way. Personally, I particularly read various economists that when even Fed tries to raise rate, it will be bare minimum because it cannot go beyond that. And inflation is something which will not be very easy to control. So what will that lead to? Again, inflation going higher as seen in bond yields. So higher inflation may again prompt gold and silver and other precious things to again go up. Now, I'm not going to predict that, but this is just the take which I wanted to share. Okay, now coming to the context of other countries, Europe, they're also reeling under pressure. Japan has also huge debt to GDP ratios. So, in real sense, nobody is spared from this, and because of the huge inflation impact of the oil, it will be a it's a global commodity. It will create ripple effect across every country if this problem is not solved immediately. Now, India relatively is a sweet spot, and the government is trying its best. And we've tried to get a couple of our ships from Strait of Hormuz. So currently, the situation in India remains under control. But if this crude thing doesn't get settled quickly, or the thing doesn't get a solution, then ultimately India may also get impacted, and the impact would be felt across sectors because it will lead to lower GDP. It may lead to lower GDP. It may lead to higher unemployment. Already, we are seeing certain tractions in terms of early indicators because this inflation will spread to food, non food items, everything, consumption bucket, everything. So, one has to be careful and understand all these implications also, which may happen. So, what exactly is the conclusion? I'm just trying to give you an overall macro picture of the globe, how India is also placed. So, the point is that we need to find a solution. At the same time, because of all these macros, it's impossible to predict how the stock market will behave. Neither I'll be in that guessing game camp. So the investor needs to understand that it may be a volatile year, and even after the war ends, as experts say, it will take a couple of months for things to stabilize because the supply shock has to be restored, the places which have been bombed have to be remade, or the supply disruptions across the Middle East have to be restored. So it will take time, and we don't really know how things will shape up. Strategy is to remain invested, remain calm, remain asset allocated, have your goal in place, and obviously discount news flow because everything in the long run, as has been seen historically, passes. Of course, there is no guarantee, as I keep saying. So, best is to remain invested and follow diversification as per one's risk profile and appetite. Now, the disclaimer, this is not any advice, this is my basic understanding which I shared. Kindly consult your experts, will not be responsible for any loss on account of contents made in this audio. Thank you, take care, bye.